Great to have you back, Steve.
Yeah, thanks. Thanks. Good to be back.
Yeah, some historic stuff going on. And
Absolutely. This is a lot of things that we're going to remember for a long time going on right now.
yeah, market memories. So, why don't you take it away with, what you're seeing now? Maybe you start to with the spike we've had in gold. I bet your service was long gold.
Well, we were very positive on gold and silver specifically.
You want to
Uh,
share your screen, bro?
yeah, I'll
It's
share
down
the
there.
screen. Let me uh,
You
switch
did such
over.
nice technical work. Always
You
great
want
to see it.
you want to start with gold, so you should be seeing the gold charts coming up here.
There they are.
Okay, great.
All right.
So just a little bit of a primer for people that haven't seen our work before. You're looking at cycle analysis, which I
Yeah.
have studied for the last 49 years. My 50th year anniversary, by the way, as a trader, when I started on the CBOE, will be on May 20th of this year. So 50
Wow.
years, if you could believe that.
Yeah. Are you starting to
Here,
get the hang of it?
yeah, it's though they do make me learn new things all of the time. It's not, you can't sit back and say you know it.
Yeah, you can't. You always have to be learning and looking for
Right,
the edge and
right,
you
right.
know,
So
I've go ahead.
let's start out with the weekly cyclical patterns here on the gold market. First of all, if I look at a bigger picture, this period that we're looking at here in the gold market, that is, let me just get the pointers
Was
up
that
here.
the handle of the cup?
Well, I don't really look so much at this as a cup and handle as if
Yeah.
as I look at this from 2020 all the way through 2023 as a massive consolidation.
Okay.
And now, if I just look at these last cycles right in here, you can see on the bottom, these cycle brackets are pointing to the energies or rhythms in the market.
Right.
This is silver here, where the important bottoms came with gold and silver. And then we got into these rising phases right over here that you see. So we were positive on the gold market. And then when it started to break above the resistances, we were very positive. This right over here is our reversal scout. Once the momentum turns up on the weekly chart, it tells us there's a high probability that we're safely in these rising energetic phases. Now you can see we moved
Yeah,
up
that
and
kicked in with the dollar breaking down on the
yes,
CPI.
very much so. And we were looking for the dollar to come down also. So that all was in sync because we were also looking for a decline in interest rates. So that, all of that really lined up well. Now you have this, of course, this bar is this week, sorry, which is
Right.
just overnight in here. I heard somebody saying about these tails don't matter. I've been trading long enough, and especially cycle analysis and candlesticks, to tell you that the tails do matter and that you can pretty much measure off of them. And often when you get a move like this isn't like a flash crash or an inverted flash crash.
Yeah.
This is just simply a short covering spike that
Yeah.
got it through and two important levels. But based on everything I look at, it's going to get there again. So, and beyond that, I'm really looking for much higher prices. This is our projections up here to 2,200 and 2,300 by the middle of next year. In the gold market, I think the patterns are fantastic. When you look at this minor pattern right over here, which calls for a pullback into the early part of 2024. So this says that December could be sloppy right in here. And you
Yeah.
see that note there, the ideal trough for the daily chart is on the middle of January, about 115. If I go to the daily chart, you could see that right over here. This cycle points to 115. These yellow areas are where there are energetic selling or outflows of cash. And you
Yeah.
could see this has really fought the ability to get any correction compared to these other ones. This is
Yeah.
what we call the swamped or right-hand translation. And what it means is that the highest probability is once this little corrective period is over with, it's going to go up again. So the probabilities of getting above that level are over 70%. That's this morning's high, about 2150. And this next target up there is around 2187.
Let me
Now,
ask you
some
this, Steve. If we get this sloppy December into mid-January, um, it's not going to be a deep price
no, I
retracement, is it?
mean,
Because that's
you
what
could supports right over here. Back to the weekly
what
are about 2025. That's our
okay,
projection down. It's not very far from here.
right.
And I think that is a screaming buy for short-term traders. Longer-term traders, the consolidation could be a little bit longer, though I don't think it's going to be very much deeper. So the gold market, I think, is in great shape. I've been also very positive in silver, and personally, I've been accumulating gold and silver for the whole last year. And then a few weeks ago, I piled into the silver miners. So
Okay.
I just think
Uh,
that
you
it's
like Fortuna?
a
Fortuna
long-term
really
trade.
acted great.
No,
Huh?
SIL, yeah, but they're all looking great. But I bought SIL and SILJ.
Oh, okay. Got it.
Yeah.
All right.
So this gold pattern is just looking absolutely fantastic. The silver pattern I won't spend a lot of time on because it's pretty much like you're looking at gold,
Similar.
except for the fact that, gold's at an all-time high and silver's at the 50% level from the all-time high. So,
Yeah, what
you know,
does that say to you?
well, it says to me that at some point, right now you're at about 80 to 1 on the ratio. And
Yeah.
if you can make a case for lower interest rates stimulating the economy, and that's the case for the reason the stock market's going up, then how do you not make a case for silver and copper? I mean, you can't make a case for one and not make a case for the other. So in the meantime, our silver projection is up into this area of around 2740 into the early to middle part of next year in the silver market. And you can see this minor pattern over here is a lot like we have in gold, maybe a few days down in here and then up again to that level that we made this morning. So that's why I tell you that I think that those wicks that it left there are at very least going to get tested on the upside in gold and silver.
Okay. And pretty shallow retracement, you think? Like
Yeah, that's what I mean.
24.37,
Silver market right now looks like
23 and a half would be a
2530, 2538 is the
yeah.
short-term support.
Oh, okay.
Yeah.
All right. But it could it also follow the time pattern towards mid-January like gold?
Well, that's the same thing. You see, here's the gold cycle rhythm right
Yeah.
there, and this is the silver one, and that points to the third week of January.
Yeah.
So, I mean, it would basically look like a test and then coming down into the third week of January
Got it.
and then getting into this area on the weekly chart where it's moving up again into that Feb extension area, the blue area. So
Yeah, a lot of people are saying 27 is the big level for a breakout.
yeah, I mean, I have it as a resistance level of around 2735, 2745.
Yeah.
So, I
Okay.
mean, that's an upside projection for me right now.
Are you a believer in this bond bottom, and are they completing something up here, Steve, where they might pull back
Well, I
halfway?
mean,
TLT,
well,
TLT.
I'm going to look at TNX because it's pretty
Okay,
hard not to get a good sense for interest rates when you look at this.
right.
If you look at the rhythms here on the weekly chart, they're phenomenal. We were projecting down to 424 yield.
Yeah, we
Once
got
we
there.
made the peak in here, so we got there. Now there is an extreme at around 406 yield. You see that right there?
Uh-huh.
So that's the possibility. The low right over here points to the first week in January is the timing on this. You could see momentum here when it turned negative. I mean, it was very clear. This is our
Yeah.
reversal scout right there. And you got to get down over here for the next few weeks potentially. There is a potential. Now, this is very important because you see this on the
Glad I
weekly
brought it
chart.
up.
You see this on the weekly chart that it looks
Yeah.
like it has time out here to the early to midpoint in January. But if I look at the daily chart right over here, which the cycle patterns are beautiful, you can see right here that
We're right there.
we're at a bottom. So what you do is you get a temporary bottom, you get a rally. These resistance
Yeah.
levels are around 4.54% to 4.63%. You see the note here, buy Treasury futures?
Yeah.
Because when it gets into this resistance, then we expect it to move down again into this period down into mid-January. So we're looking for a short-term rally and the point to buy futures again for a short-term trade, with yields then moving back down below that level with a potential of 4.06 yield right there. So, I mean, if you look at it on the TLT, I'm not sure I have the TLT updated on here. Yeah, it's
the drift.
Pretty close, but you get in here that we're still expecting the rally into TLT out over here into this January period. But then here's the shocker. I think that yields are going to explode again after that. And we could see yields go from 4% back up to the high fours, or maybe even 5% again.
Well, you show TLT peaking right here and then pulling back towards 88. Isn't it? Aren't we right around time and price for correction?
We're right around the time and price, I'm sorry, for the correction, right from this level. And then
and up again.
And then up again. So if it's let me just get this pointer here so I stop with that mess. This support here could get down to about, I'm thinking I have it drawn too deeply in here, and it supports here around 89-ish, and then moving up again. So this rally here on the daily is the same as this extension up here on the weekly. Then you get the below in interest rates, you get the peak in futures. So, this is where I said buy futures right over here, where you get that bounce in yields, and you get that one more trade up over here on the weekly and the daily chart in the TLT. Next question.
How do you keep a positive mental attitude when you're in a drawdown?
Oh, well, you know what? I have a great video out there on about managing your slumps.
Okay. And tell us a little bit about it, because not everyone is maybe performs as well as you do, and I know you've had your times in the past where you've had to live through it. And when we talk about the charts, I say this, Steve, it's great to make a nice call, better to make a nice trade, and the best thing is a great hold.
Yeah.
But much easier to put out analysis and just know where things are going to go than trading, because in trading you could be a day early and it could screw you up.
Yeah. Well, I've actually coached traders for about the last 27 years.
Yeah.
And I don't even do that anymore because I'm so busy with my business. But the key is that is to understand that when you're in a slump, the reason the slump extends has got nothing to do with the markets or trading at all. It's all about personal issues. Because what happens to traders is that, and believe me, 50 years as a trader right now, I've had my share of very dramatic slumps, and I had a lot of personal growth periods I had to go through to learn how to mature and to survive those periods. Some of them were barely survivable for me. And the reason for me and the reason for most traders is that they ask trading to solve life issues or promises that they've made, paying bills, or the amount of money they're supposed to be making based on what their agreement is with their spouse or partner or business partner or whoever it might be. So once they start to perform poorly, those aspects of life start to come into the trading. And they have to, when you have a bad trade, all of a sudden it means that, well, I'm not going to be able to pay those bills, or I'm going to have to hide something from my partner or spouse. Or so a lot of people have that issue where they hide their results. And what happens is that the success of trading, or the fact that you're extending out a slump, it just bleeds into your real life. The trading contaminates your life contaminates trading. And until you get to the point where you can isolate those, where you can separate those, where you can be honest with where you are in your trading and life, you're going to keep struggling. You have to really be able to be on plan. It's process versus money. And it's life issues versus trading plan and plan issues. You can't let those things bleed into each other. Once you really solve that and really hold on to what your truths are, in other words, you can't let a bad trade say, I can't pay my kids' college bills. You have to say, I'm in a bad spot. I'm going to sit back and I'm going to wait for the higher probabilities. I'm going to focus on my trading plan. I'm going to manage my risk rewards. There's so many aspects to it. They get traders in trouble that they can't see when they're in that fog, when their emotions are flooding them. It's important to step back, see where you are, get back on your plan, own up to the money that you've lost. Be honest with yourself, your partner, your family, whoever it is, and then you really get a clean, fresh start. You can get out of that heavy emotional period and get back into a very positive period where you
Because
can
it
focus on
can
the
ruin you
markets.
if you don't get a handle on it. It could ruin you, can't it?
Yes, absolutely. If you don't, because what happens to a lot of traders that fail is that they get into a place of so low confidence that they can never really see their way into tweaking their trading plan, into raising the money that they need to be successful, into making sure that they have outside funds that can pay their bills, and that it's not dependent on trading, and that every trade is not contaminated by
Life or
whether or
death.
not they can do those handle those life issues.
Yeah, so
So
the key is to get to trading as it's just another trade and next.
that's correct. And that it's managed like a business. I mean, every day you come to your business when you trade, especially if you're trading as, as where it's your career, it's your job. People that, come in with low amount of funds and are just trying to learn or doing it as a hobby or for fun, they have a very, very low probability of success. It can't be done as a hobby or for fun. If you want to do that, give your money to a fund manager that at least has experience and can, handle the money on longer term. But trading is very serious.
Steve, I tell you what, that was worth so many pearls of wisdom that people should listen to this again and
Yeah, they should, go
get
to
a
my,
grip
I
on
have
it.
over 500 videos on my site, of which at least 250 of them are evergreen on things I've done on trading or trading psychology or the
Yeah.
trading plans and technical things. I have 80 different technical videos. So there's so much they can learn by going on there because I've shared so much of my experience.
I was wondering if I could experience your trading psychiatry by being on a couch in your office.
Well, I have not. I have actually stopped doing that right now.
I
Though
know.
I have 1 hour one-offs that I do with people at times,
Yeah,
but
yeah.
basically, it's I did so much coaching for such a long period of time that when I
Takes a
started to
lot of
really,
patience.
yeah, when I started, well, I'm okay with that, but you move on to different areas of your life, and I'm trying to write
Yeah,
a trading book, which is just massive amount of work, and
yeah, it's really
uh,
tough,
so
but
it's
worth it.
yeah, so it's
All the things
I'm
you have to force yourself to do are usually worth it,
yeah, that's
right?
true. I expect to finish that in the next year or so.
So why don't we wrap it up with your view on risk and what you foresee since we're heading into a new year?
Yeah, well, I
Kind of get a
mean,
macro look at what you're thinking in SPYs or
yeah, well, I'll put
NASDAQ.
up the S&P 500 right here, which
Okay,
you should see there.
got it.
And if you remember, the last time we spoke was in August. I was bearish, and I thought the market would decline into potentially late October, early November.
Yeah,
And we had an absolutely perfect cyclical low there. The timing was just fantastic, as you could see.
yeah.
So I think, and if you go back and watch my year-end view from last year, which is on YouTube in 2 parts, I believed that we were in a cyclical bull market that is living within a secular bear market. Nothing has changed in my view in that at all. I still think that we're in a cyclical bull market that's going to peak with potentially the Dow making all-time highs, but the other indexes not, or testing them at best. And that the reason for that, I think, is because I think there's going to be a huge rotation as we get into next year.
Out of the Mag 7?
Yes, because they are now at historic levels of the percentage of the S&P, far, far beyond that of the dot-com period at the end of, right around 2000. The highest tech stocks valuations were 22% of the S&P then, and they're 29% of the S&P now.
Yeah.
There's a massive over-owning
concentration is unbelievable.
Yeah, and that money is going to come out of there, and that's going to help the stock market hold up, I think, during this period. You can see my projection for the S&P 500 really at a best case is around 4750 to this level here on the fib extension, 4780. There is a potential that right now it's going to peak and then begin to come down. But the short-term patterns are very positive. When I look at this now, our momentum conditions are very strong. You can see our slim ribbon PO on the bottom giving an upward momentum signal there. This formation is super strong. So it points to a little bit of a pullback over the next several days and then moving up again. And then this period where it corrects out into the mid-period of January. Interesting, mid-period of January is very important on all of the cycles that I look at. So it's an important period. But I'm thinking this area. Now, our projection, 4706, it was amazing that it got through there. We thought it could stop at 4,500, but if it got through there, 4706 was the next level. And now this morning, it's going to pull back pretty sharply. So I think that, based on the macro environment, I think that they're wrong on the level of interest rates that are coming down now. And I think we're going to get into a period where interest rates firm again next year. That's probably going to be a period where there's some corrective action that we see going on in the metals also, and where we get a bounce in the dollar. But in my opinion, the dollar still has lots of issues. So I still think the dollar, other than the period where I think in the beginning of the year where interest rates are going to pop again, I think that's the only time that the dollar can do well. I think there is a massive flow out of fiat right now. I think fiat, the reflection of that are real assets and real money. And I think commodity markets are going to have big move next year on the upside. And that's going to be a problem for the Fed because they're in a doom loop. Because they cannot get out of what they've done. Because if the markets and the economy turns down, they're going to cut interest rates, and commodities and metals are going to soar.
Fly.
Right. So
do you think the plunge protection team was in there shorting gold last night?
No. I mean, the gold move was a short covering burp that got up through important levels. The same thing for Bitcoin, because Bitcoin, we were projecting 4,200,
42 grand. Yeah.
42,000. Sorry.
What's the message? I'll ask you this: the message of Bitcoin and gold and silver doing what they're doing. What's the market telling you? What's the message from that?
The message is that the central banks around the world have completely ruined us. That with 100 years since the Jekyll Island and buying power of the dollar down over 98%. That's reflected in the price of metals, certainly in gold. And you think anything is changing right now? It's not. So we're looking at continued decline in fiat until the fiat is over with. I mean, if you look at the relationship between the Swissy, which is now only about 7% gold, and the rest of the currencies, it just shows you how much of a demand there is for some sanity in the money markets. So that's why I think gold could easily be 3,000 in the next 5 years. I think we're in for a period where the chaos.
How about long-term targets for Dixie, and we'll wrap it there. I've seen, I could come up with like 85 if it's 1.618 of the first 1,400 point move last year. from the recent 107 high. Um, I've seen people have numbers in the 50s long term for the dollar.
Well, I'm just going to look here at the weekly patterns right here, which you can see the rhythmic consistency in there. And right now, my projection is around in the 99, 98 area,
Yeah. Okay.
sometime mid next year. Now,
Okay.
long-term patterns are far from breakdowns, in my opinion. So the long-term monthly pattern support is at around 99.65. That shows you the importance of this period right now. If we can get down to that 99.65 area during this period that looks weak out into the second to third quarter, first to second quarter of next year, it's going to be over for the dollar. This is a very important period for the dollar. Supports, you can see, got here on the minor cycle.
Yeah,
That
that's
says
61.8 back right there.
that says that it's likely this is the 61.8 back. Exactly.
Yeah.
This is the 78.6 here.
Yeah.
Remember, I said that I think early part of the year interest rates are going to go up and it's going to surprise people. That's this rally in the dollar right here. But once this fails and then starts to come down again, if it gets down to that area, right down to this low, I'm just going to duplicate that right there because that's the monthly bottom also.
Yeah.
That will be the end of the dollar. This is such an important time period coming into April, May of next year.
Yeah, that was a graveyard save down there at 99 when they broke down prior. And then we had this 50% rally. Right. Yeah, you've been bearish a dollar, Steve, so I'm concerned about it too. It's great. I wrap it with this last question. It's great to make money and be successful, have a nice size account, have wealth. I don't know if you're still comfortable with banks, but what about the big picture? When you come right down to it, is it going to matter if they try and change our currency to a CBDC, and there's some rough times everywhere?
Well, I think I think if they, I think there's enough sane people out there that will prevent the digital currency here in the U.S.
Well, God, I hope so.
Massive loss of privacy if that happens.
Yeah, it's over. Or
yeah, right. So I actually don't believe they're going to be able to do that, or maybe not in my lifetime, which hopefully has got a couple decades left to it. But I think they're not going to be able to do that. And if anything, I think cryptocurrency is going to have a crash. So because you can't have unlimited amount of anything able to be created, and I don't want to hear the bull crap about 21 million Bitcoin available. They can create all they want, the variances of that, and with over 20,000 different digital currencies, cryptocurrencies out there, and always being created. There's no limit. So
Bitcoin is not the new gold.
Bitcoin
AKA
is not
Steve Slim Miller.
It is
okay,
not.
Ben. That's a great way to close the show. Best way for people to follow you, partner?
Just go to my website, askslim.com. There's lots of ways that they can watch us, what we do for free. And there are 4 different membership levels for premium, for active traders, in currency, in indexes, currencies, anything that they may be trading. We have analysis on it. We have 4 people on our analytical team that are phenomenal. AskSlim.com.
Steve, I'm so glad our paths crossed. I'm grateful to Twitter, X, that we met.
Yeah, right. All right. Thanks for having me. Looking forward to next time.
Have some great holidays, Steve. Appreciate it, my trading warrior brother. Very
all right.
Giving nature you have. Thank you.
Appreciate that. Bye-bye.
All right, that's a wrap, everyone. You could join the team in 14 minutes on the Morning Edge. Hope you enjoyed that. We do record these. If you want to listen to anything, we have an archive of over 6 years of great interviews, if I must say so myself. Well, probably well over 1,000 there. and there's pretty timeless, and you could go back and see what people were thinking a year ago, and then, might give you a good laugh too. Anyway, just thought in case you get bored that you could just go back and look at all these interviews. I'll see you, Steve. Thanks
Take
again,
care.
buddy.
Bye-bye.
All right. And that's a wrap. Don't just count your pips, count your blessings. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.